Welcome to Astra Stocks. When we talk about stock market, even people who don't know anything about it can guess just by the name that a stock market is a place to buy and sell stocks. Even though this is common knowledge, people who are willing to learn about the stock market don't really know about the different types of stocks that are out there. And when I talk about these stocks, there are certain types that everyone must know before getting in deep. So let's take a look at some major types of stocks. The first type of stock that we're going to discuss is the common stock and the preferred stock. Most stocks that people invest in are common stocks. A common stock represents partial ownership in a company. You grow if the company grows, and you go if the company goes. And coming to preferred stocks, they're basically the same as common stocks, but there's just one difference that sets them apart. You get a fixed amount of money when a company dissolves and you've bought stocks from them. Now let's move on to the next type of classification. Large cap stocks, mid cap stocks, and small cap stocks. Before we understand what these different types are, we need to understand a concept called market capitalization. This concept might sound fancy, but it's fairly simple. In order to estimate the market capitalization of a particular company, you just have to multiply the total number of outstanding shares of that company with the price of each share. Let's say we have a company ABC. Let's say ABC has 1000 outstanding shares and each share costs 20 rupees. So the market capitalization of ABC will be 20,000 rupees. Now let's understand how market capitalization applies to different types of stocks. Coming to large cap stocks. These are stocks offered by stable and big companies. When I say big, I mean the market capitalization of this company has to be more than 20,000 crore rupees. An appropriate example would be Reliance. Reliance has really low risk and is a very stable stock. Let's talk about mid-cap stocks. Companies offering mid-cap stocks are valued with a market capitalization of less than 20,000 crores but more than 5,000 crores. These companies hold a lot of potential to go big but still have a higher risk compared to large cap companies. A good example would be Castrol or LIC Housing. These companies obviously have more growth potential than the large cap stocks, but then the risk is obviously higher. Now let's talk about small cap stocks. These are stocks from companies with a market capitalization of less than 5,000 crores. These stocks have the highest risk among the three types, but they have the most growth potential. Even if they are valued at a low price, they do give a high return when the company attains a good profit. A best example would be Hathway Cable. The next type of stocks are domestic stocks and international stocks. This classification depends on which country you're considering the stocks from and which country the company's headquarters is based on. For example, if you're in India, you obviously know that Reliance headquarters are based in India, so you'll be buying a domestic stock. If you're buying a stock like for example Apple, that means you're buying an international stock from India. Also, some companies may have their headquarters in certain countries, but their sales may be centered in a different country. And here it's hard to distinguish whether they are a domestic stock or an international stock. The next important type are growth stocks and value stocks. Growth stocks tend to have higher risk levels, but the potential returns can be extremely attractive. The competition can be fierce though, and if rivals disrupt a growth stock's business, it can fall from favor quickly. Value stocks, on the other hand, are seen as being more conservative investments. They're often mature, well-known companies that have already grown into industry leaders and therefore don't have as much room left to expand further. The next type that we're going to discuss are IPO stocks. IPO means initial public offering. A company could be a privatized one or a government one, but they do allow investment through an IPO. After a company goes public, the stocks have an IPO status for 1 or 2 or 4 years. And during this time, the buzz and excitement for the stocks from the investors will be really high. The reason for this is because the public is given an opportunity to get on board on a really good idea and then expand themselves along with the business. The next important type is dividend stocks and non-dividend stocks. Usually, investors make a profit by selling their stocks or shares after the company they've invested in increases in value. But then, there are certain times in some stocks when the profit is divided among the shareholders by the company regularly without the need to sell their stocks. Many stocks make dividend payments to their shareholders on a regular basis. Dividends provide valuable income for investors, and that makes dividend stocks highly sought after. So these stocks are called dividend stocks. Let's talk about cyclical stocks and non-cyclical stocks. Cyclical stocks are those shares of companies in industries like travel or luxury or manufacturing, and when an economic downturn happens, this takes away customers' ability to make major purchases quickly, and these shares automatically suffer. Talking about non-cyclical stocks, these are stocks that don't generally have big swings in demand. An example would be grocery store chains, because no matter how good or bad the economy is, people still have to eat. Stocks are also divided based on the sectors that they belong to, and these sectors are communication services, consumer discretionary, consumer staples, energy, financial, healthcare, industrial, materials, real estate, technology, and utilities. Finally, let's take a look at blue chip stocks and penny stocks. Blue chip stocks are shares of very large and well-recognized companies with a long history of sound financial performance. They can endure tough market conditions and give high returns in good market conditions. Penny stocks are those with very low price, and they are used to get trading experience for new traders. These stocks are very low priced, and it is almost risk-free to try your luck with penny stock trading, and these are traded in India on the NSE and the BSE. If you have any questions about more types of stocks, do let us know in the comment section. And please join our Telegram group in the link given below for more discussion on stock markets. Like this video, share it with your friends, and subscribe to this channel to stay updated on stock markets, investments, and trading.